in, first out, unless you dollar cost average.
That was kind of new to me.
Yeah. Okay. Cool beans. All right. So, how you doing this evening?
Doing great. Great to be here.
Did you have a good weekend?
Absolutely.
How many stocks got called away from you?
I had 5, which I was expecting all of them. I was just surprised by that one with how it calculated things. So.
Really? I had.
I'm learning the new process. It's just part of learning.
It's a learning curve. But did you make money? How's that one? That's a better question. Did you make money?
On what I'm tracking, yes. How it calculated it, no. So, so I had Dow, but I was tracking 2 different lots on Dow.
Okay.
But because it did the first in, first out, it showed that I lost money on the realized profit and loss. But it'll balance out when the second lot is taken care of.
Okay. I guess we'll take a look at that tomorrow.
Yeah.
All righty. All right. Well. All right. Don't forget to mute your microphone. And anytime you have a question, just unmute and ask away. Joanna, good evening. Joanna, good evening to you.
Good evening, James.
How you doing?
Wonderful. Happy to be here. Excited for tomorrow morning.
Oh, me too. Another day. Okay, Joe says hello. Shoto says hi. Joe, and Shoto. Okay. Hello, everyone. Let's see who we have over here. Just getting ready to get started. Who do we have? All right. Who do we got? All right. Here we go. At the very beginning. George Connell. Good evening. Raul Duke. Just Woo. Jeff, good evening. Jesse, good evening. Tall Sports Guy. Oh, that's a tough one. Chad, good evening. Joe, Bennett, Captain Brian, Shara, Jack Smalley, Domnist. Good evening there, Domnist. Cody, Sally Favor. How you doing there, Sally? Eric Tom, Atlanta 76. Paulo, ¿qué pasa, amigo? Philip, K. Mike in Love. How you doing there, Mr. Mike? All right. Mama Bear, Javier. Just Steph. Nick Gruber. Peter. Matoski. Cool name. Russ, good evening. John Werner, good evening. Brian, how are you today? Lynn, good evening. From Alabama. I was in Alabama once or twice. Eddie Rose, how you doing? Judy, Ray, Dwayne. Kevin wants to take a look at Kohl's. Kevin will take a look at Kohl's. Hold on a second. Jen Pinka, good evening. Carmen, good evening. Manowar, good evening to you too. Donnie, good evening. All right. Oliver, how you doing, Oliver? So who do we have all the way over here? We have Noah, Eric, Smarty, Cody, Vin, Norris, Hundal, DL, E39, Lynette. Good evening, Miss Lynette. Gary, Randy, Jolly, Olali, Excognitive, Matoski. You're on both channels, Katoski. Good for you. Kay, Marshmallow, what's going on? Small Mouth, what's going on? Rough Lawn Man, good evening. Want to say, Rolo, Randy, Andrea, Devin, what's going on? Donnie J. Who do you have there? Ray. What is your name of country? Phil from New Zealand. New Zealand, how are you doing? And Oliver is from England. Cool beans. What the hell are you guys doing up so late or so early? I don't know, one of those. One or the other. Man of War is from Toronto. Cool beans. Alrighty then. All that being said, let's get ready to rumble. I can't say that. It's a trademark, isn't it? I don't know. I don't care, really. Anyway, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, show you exactly what I'm doing. I created it in 2008 for my 9-year-old daughter. She said, "Daddy, what are you doing? Can you teach me?" 9 years old. "Daddy, can you teach me?" Not, "Daddy, can we get a puppy?" Not, "Daddy, can we get a kitten, a bunny rabbit, chinchilla, rabbit, rat, anything like that? No. Daddy, can you teach me how to trade stocks? Most adults don't get it. Most adults get it wrong. Anyway, you can do 4. Hey, brother, what's happening? Andrew, dog, what's going on? Florida, Georgia. Doctor's in the house. Alrighty then. 310-man roof. Okay. Are Sony calls a good option contract to enter? I don't do that. I don't buy call options. I sell them. Florida, Georgia, cross country. How you doing? All right. Flow Master, good evening, good evening. Romero, good evening. RD Congo, the Dow, all good. Wall Street, blah, blah, blah. Okay, anyway, all that nice, neat, kind of fun stuff. Let's get in. Let me show you what we're going to do tonight, and let me explain to you what we're not going to do. First of all, you guys are going to give me some stocks to take a look at. I'll throw them in, give you my opinion, and show you what trading strategy I use. Show my 9-year-old. Hold on. What do we have here? Wall Street all the way from Washington, D.C. Hello. Arch, you got to give me the ticker symbol, Bishop. I don't know that one. Archer Aviation. All right, I'll take a look at it. Selling call option has always been confusing to me. I guess because I've always just bought calls. Okay, Dave, sit tight. Let's see if I can explain it to you in a manner in which you'll understand. Okay, Lionel Guerrero, SPY. We'll talk about that in a little bit. Go on. Teach me something, nerd. Holy cow. I am so far from a nerd. It's unbelievable. In high school, I was one of shop rats. I did machine shop. I did wood shop. I did construction. I stayed away from the nerds. And then I was actually an athlete. I actually have my letter jacket, which has my name on it. No, nerds did not have letter jackets. Terribly sorry. So no, that's not me. What's up? How was your day? My day was adequate. I went to church, bought some fish, had a nice lunch, blah, blah, blah. All that retired kind of stuff. Anyway, let's cut out the pleasantries. Let's get down to it. Can you please take a look at Starbucks and Macy's? Kika, yes, we will. I'm going to pause those comments right there. We got a couple to look at really quick. First one on the list is going to be Kohl's because they was first. Next will be Archer Aviation, and then we'll take a look at Spider. Tell you why I don't like spiders. Other than that, let's go over the basics again. Now, remember I said in 2008, right, that was quite a while ago. 2008, what's that, like 17 years ago? 2008, my 9-year-old daughter jumps on my lap and says, Daddy, what are you doing? Can you teach me? Out of all the things for a 9-year-old to say is, can you teach me? See, here I am trading stocks like I normally do. But how can you teach me? All right, fine. So how do you teach a 9-year-old? When most adults don't get it. Most adults have a difficult time with it. Most adults have a tendency to lose money because they don't understand it. So for my 9-year-old, I had to come up with a strategy. Now, here is the criteria that I had to keep in mind. After all, she's 9. Criteria number 1, it had to be simple. Safe. Don't disrespect this guy, please. He's really a lifesaver if you have a mental capacity to learn. I'm from the streets and still see the value in this. Hoo-hoo! Thank you very much, Battalion Bully. When you say Battalion Bully, I go back to my Army days, and I think, who was the battalion? It would be Watkins. Watkins, this guy, big, tall, black guy. He used to... Let's not do that. Anyway. So for a 9-year-old, the strategy had to be simple. And we all know why that is. It had to be simple. It had to be safe. The profits had to be predictable, consistent. And here's a good one. You ready for this one? No way for her to lose. 5 criteria. Simple, safe, predictable, consistent. No way for her to lose. Because we all know if a 9-year-old little girl is going to start losing, what's the first thing that's going to happen? She's going to start crying, and Daddy, that's me, is going to feel like crap. Well, to complicate the scenario and to compound the problem, Mama's going to get involved. And you know how mama bears are. Yeah, Daddy's sleeping on the couch. But you know what? The couch was really comfortable. I paid a lot of money for that couch, and it was really comfortable. But you know what it's like. Dad, it's never a good thing for the children to see Dad sleeping on the couch. So, simple, safe, predictable, consistent, no way for her to lose. That's it. So, with 5 criteria, you're going to have 5 rules. Or however many rules it takes. So for my daughter, I want to make it simple. 5 rules. Rule number 1, If it's not on the list, it's an automatic no. Now we're going to talk about the list in a few minutes, so just sit tight, listen to the rules. If it's not on the list, it's a no. Never sell at a loss. Make sure the company is consistently profitable. This one, number 3, boggles my mind, and you will see throughout the night. When you guys ask me to take a look at a company, I will take a look at some numbers that you probably didn't think of looking at. And I will say these words, ready? Quote, unquote, ready? What the hell were you thinking? If you're going to invest your money into something as an investment, hey, Hollywood! Hollywood's in the house. If you're going to invest your money into something, don't you think it's a wise idea to put it into a company that's profitable? And I'm not just talking, this year, last year. No. I'm talking 5, 10, 15, 20 years of consistent profitability. Rule 3, consistency of profitability. Make sure the company's consistently profitable. We will go over that when we go over the list also. Rule number 4, weekly options only. Now, the title of the show is Dividend Investing for Weekly Cash Flow. So the words dividend should give you an idea that the company should have dividends. Cash flow should give you an idea that I'm looking for cash flow. Weekly means, well, I want my cash flow on a weekly basis. So I give about everything away as we go. Dividend investing for weekly cash flow. So the companies have to have weekly options. It's either that or I got to stand looking at this thing. And I do not want to sit in front of my computer. I don't. I tried day trading many years ago. It's not for me. Sitting in front of the computer as the clock ticks away, tick tock, tick tock, tick tock. My whole day is gone. What did I do? I made some money. Big deal. At some point in your life, money will lose its luster. There's a great quote from Conan the Barbarian. At a point in every man's life, diamonds cease to sparkle. Jewels lose their luster. Money has no meaning. I don't know if you guys remember that part in Conan the Barbarian. But at some point, money will not have the same draw as it probably does now. I mean, you're here, you want to make profit, you want to make a little bit of money. You might want to retire easier. I'm retired. So I don't have the luxury of being wrong. I don't have the luxury of making mistakes. Some of you that are still working, hey, not a problem. You lose a few bucks, you go back to work and you double down a little bit, maybe put in some overtime. I have no desire to punch a time clock again. And for those of you who think that I'm lazy and I should get a job, I've been working since 1973, my very first job, 1973. I've worked over 5 decades. I think I'm entitled. And you know what? I honestly don't care if you think I'm not entitled to retire. I can afford to. I've worked 50 years. I paid my dues. At least I think I've paid my dues. And I'm doing the younger generation a favor. You know what? I'm stepping back. You take my job. You say you can't find a job? Here, take mine. Okay? Rule number 5. Make sure all the numbers work. Now, we're going to go over all the numbers and a few examples. So I'm actually going to take a look at a bunch of stocks. You guys are going to suggest. We'll take a look at them. Do they make sense? Out of everything you get out of this is one question I want you to get and understand. Does it make sense? It's a simple question. Does it make sense? Now, I implore you, okay, don't listen to a damn word I say. Seriously, do your own research. Does it make sense? That should be all you walk away from. And then you should think about it. Sleep on it. Let it haunt your brain. Does it make sense? 1% a week is over 50% a year. And I'm not asking you to change your life. I'm asking 5-10 minutes a day. Well, think about it. You brush your teeth every day. Maybe you shampoo and shower every day. Oh, get this one. You probably eat every day. And if you have pets, you probably walk them and feed them every day. Well, if we are the only species on this planet that's got to pay to live here, why don't you take care of your money every day? It's a valid question. Because no matter what you do, I find it very difficult for me to go through a day without spending anything. I spend money almost every single day. Not that I do it on purpose. It just happens. You know, you got to have breakfast. Well, that's going to cost money. You got to have lunch. That's going to cost money. Well, I want to sit back, relax, watch a movie. Well, that's going to cost money. Well, I don't want to do anything. I just want to lay in bed. Well, guess what? It costs money to have a bed. And guess what? It costs money to have a house. So almost every single thing we do costs money. Well, I can go out for a walk in the woods. Well, you go for a walk in the woods, you're going to need a pair of boots. That costs money. You got actually got to get to the woods, which means you probably got to take a bike or take a car or whatever. Everything we do costs money. So why not put just a few minutes a day into what is my money doing today? Think of it as a garden. If you take care of it, you can have a beautiful garden. If you take care of your money, it's going to grow and it's going to be there and it's going to be safe. Great. Well, let's get into it. I've enough blabbing. Let's get going. So what I'm going to show you is a simple trading strategy I created for my 9-year-old daughter. See if it makes sense. That's it. Does it make sense? Then I'm going to show you a couple of trading strategies that are simple, easy, predictable, consistent, because it had to be simple, safe, predictable for my 9-year-old. All right, so let's take a look. Very first one I'm going to look at today. Well, let's look at Siri. It's already up. Why the hell not look at it? All right, I'm going to need my glasses for this. Now, I do own some Siri, and the ones that I do own, I will let you know that I do own them. It's not a suggestion. Number one, I don't give tips. I don't give suggestions. I don't say buy this, buy that. No, I don't do that. Okay, I will take a look at something you suggest, and I'll tell you, yeah, I wouldn't buy it, or yeah, I would buy it. That's just me. You've got to figure out what works for you, because we're all different. Every single night, I broadcast on 9 different channels. 9. Okay, so a couple of things. Number one, if I don't get to your question right away, it's not that I'm ignoring you. Okay, it's just that I have a lot on my plate, just by myself. Because this is not a business, this is just a hobby. I find it fun. I find it entertaining. I need something to keep me busy, keep my mind sharp as I'm retired. So yeah, I've been doing it for over 20 years, and a lot of people have been asking me, say, James, why don't you teach what you do? So I've been doing that since 2011. My first blog post was August 2011. And ever since then, I've logged almost all of my trades. Now I'm up to 7 accounts now. I do share 3 of them publicly, so you can actually see everything that I do. Okay, I also have a trading group we meet in the morning, and those people get to watch everything I do, and they get to ask me questions of everything I do. But I'm going to stop right there, because I've always promised myself I'm not going to sell anything. I'm not going to try to sell anything here. We're all adults. We don't know how it works. Okay, you know I have a group. You know I've written books. You know I've done this and I've done that. Yeah, it's all there. It's up in the bio. You know, click it, find out that way. I'm not going to sell anything. But here's the thing. Number one, if you have a desire to have a conversation with me, we'll talk about anything you want. Okay? I promise one thing. If you leave me your phone number, I will call you back personally. Second, I honestly will not try to sell you anything. All right? Just want to have a conversation? Great. Tell me who you are, what you're looking for, and maybe I can give you a few pointers. All right. That being said, let's roll. First thing we're going to look at. Now, I do everything systematically. A, B, C, 1, 2, 3. So as you're watching, if you look at some of my older videos, and yeah, I have about 1,100 videos on YouTube. Okay, I have over 900 podcasts. I stopped doing the podcast about 2 years ago, because one thing I really hate is when they give you something for free and you help them build it, and all of a sudden say, oh, we're going to start charging you. Yeah, you know what you can do. So 900 episodes, podcasts. They all say the same thing. Okay? Not the exact same, because every single day in the market's different. It's all similar. You know, the market opens, it goes up, goes down, goes up, goes down, goes up. People make money, people lose money. It's all the same. Anyway, let's keep on going. As you see, you'll see a pattern. And it's always the same over and over and over again. So anytime I look at any stock whatsoever, I want to look at the 1-year chart right there. And I'm looking for 5 things. And it takes me 3 to 4 seconds. Now you might be thinking 3 to 4 seconds is not enough time to digest and dissect a chart. Yes and no. Let me explain. Yes, I'm looking for 5 things. High, the low, where was it, where is it, and what's the direction? Down, up, down, up, down, up. It takes 3 to 4 seconds for me to figure that out. What also I'm looking at, I'm keep my peripheral vision right here, because this is the last couple of weeks. This is what's happening now. This here, this is a year ago. This is 6 months ago. This is 3 months ago. This is this past week. That is what I'm looking for. What are the investors? What are me, you, and the other people here? What are they doing on a consistent basis? Well, this is Siri. Now, Siri had 3.7 million shares traded on Friday. Now, my 300 or 400, or actually, Siri, my 1 or 2,000 shares of Siri doesn't mean a whole heck of a lot when we're looking at 3.7 million. Okay, so let's progress. Okay, high, low, was, is, look at the motion. Okay, now that right there tells me, those 5 things, tells me I want to look a little further. But before I look further on the chart, I want to make sure it's worth my while financially. Remember I said make sure the numbers work? So I'm looking for one number on the board. And it's repeated several times. You ready? Watch this. 2344. 2344. 2344. 2344. That's the last trade on Friday. That's the big number on the board, 2344. So remember I said a simple trading strategy? We're going to get into that. Remember, like a good movie, everything comes together by the end. Now, when I'm looking to buy something, I want to buy it and I want to sell it at the exact same time. I want my profit. Remember I said simple, safe, predictable. We're going to get into that in a minute. Simple, safe, predictable, consistent, and no way to lose. We're going to get into all that in a minute. Right now, predictable is the one we're going on now. So I want to know, what am I going to make before I even do the trade? And is it right? Does the numbers work? Is it right? Okay, so here we go. So here's the price right here, 2344. Now I do what is called a covered call. Now I only do covered calls on dividend stocks. That's where the dividend comes in. Pre-qualified dividend stocks. And those, remember, this is where we come to the list. Remember I told you about the list? If it's not on the list, it's a no. Yeah. Okay, if you got a pencil and paper, write this down. If it's not on the list, it's an automatic no. So what does the list look like? Are you ready? Only, okay, wait a second. I got somebody over here making noise. Who do we have? Who do we have? Michael. Ding, ding, ding. Michael, winner, winner, winner. Oh, and Andy. And sorry, I got to mute you guys because too much feedback. Sorry. All right, there we go. All right, so where was I? Oh, numbers. Now, I do a covered call on a pre-qualified dividend stock. A pre-qualified dividend stock is a company that has consistently been profitable. Remember, consistently profitable, rule 3. Okay? I don't invest in anything unless it's consistently profitable. What I'm looking for is consistently profitable companies for at least 2 decades. Now, you might be thinking 2 decades is a long time. Well, hate to be the bearer of bad news, but the stock market has been around for 400 years. 400 years. The very first dividend stock was sold in 1602. 1602, the first dividend stock. They weren't even brokers. They were, what do you call them? The people who created the first dividend stock. What do you call them? They weren't brokers because there was no such thing as the stock market back then. So they couldn't be stockbrokers. Okay, well, they owned the company. What they were trying to do is they were trying to raise money. A whole shitload of money. A whole boatload of money. Because the very first company was the East India Shipping Company. The East India Shipping Company. Okay, they actually went door to door. Have I got a deal for you? You invest in our company and we promise to share the profits with you. They literally went door to door raising money to create this huge company. And to this date, the Dutch East India Shipping Company is one of the biggest companies that's ever on the planet. Now, they did successfully reign supreme for 198 years. Now, for 198 years, they averaged 18% interest. Can you imagine that? 18% interest for an average over 198 years. That's pretty damn good. So, the covered call, where I buy the stock and I sell the stock at the same time. Does it make sense? We're going to go over that, and the numbers have to remember rule number 5, do all the numbers work? Here we go. What am I buying it for? Big number on the board, 23.45, the closest strike price. Now, a covered call is where I buy the stock, I sell the option. If you don't understand that, there are literally hundreds of videos explaining what a covered call is. It is one of the safest trading strategies there are. The safest is just buying the stock. That's safe, but it's not profitable. Because just because you buy something doesn't mean squat. The stock has to go up in order for you to make a profit. Not so with the covered call. It's simple, it's safe, and it's predictable. That's why I put it. Now, it wasn't my idea. Okay, someone else came up with the covered call many years ago. But for my 9-year-old daughter, simple, safe, predictable, the safest strategy I could come up with for her was the covered call. Now, pay attention and see if it makes sense. So, if I buy it first thing tomorrow morning at 23.44, now, before we go any further, before we have any negative naysayers, yeah, I know all these numbers will change tomorrow morning. As the market opens, all these numbers change. But at this moment in time, I'm using it as an example to show you how to do the math. Well, the math is pretty simple, so follow along. If I'm buying it at 23.44, I get two choices, the 23 or the 23.50, one or the other. The 23 is safer, the 23.50 is more profitable. Well, let's look at that. So the 23, if I buy it at 23.25, I'm losing 25 cents. So I take 25 cents off of that. That means I'm walking away with 43 cents. It's simple math. Okay. Now, I bought this new Vibe board, but I don't know how to, make these bigger. I don't know how to do it. So, as a learning curve, I'll try to figure that one out. Okay, wait a minute. Let's hold on. Uh-oh. All these questions. I stopped the questions so I can actually answer them. All right, let's go right there. All right, we're going to stop right there. So, if I'm buying it here, okay, and I'm selling the 23, take 25 cents off that, so I'm walking away with 43 cents. Now, 43 cents does not sound like a lot, but here's the thing. 43 cents on a $23 stock is close to a 2% return. So here's the part we got to think. Does it make sense? All right. So do I like Siri? And if I buy it and I sell this right here, well, I can make 2% for this week. Or I can go to the 23.50. Well, the 23.50 is paying 38 cents, which is 1.5%. And if I'm buying it here and I'm selling it here, well, I get the difference between this and this, which is an extra 6 cents. The numbers all work. Remember I said rule 5, make sure all the numbers work. What am I buying it for? What am I selling? What am I collecting? Is it 1% or more? Now we're going to actually do a sample using this, and then you can see, because we're going to do a bunch of them. And if you didn't know, if you're new here, this screen here and me standing here is being broadcast live on YouTube. So if you can't see all these little tiny numbers, you can go into the other room. If you're at home, go into the other room, pull up your big screen TV, and if you have a cable TV, well, more than likely you can watch YouTube videos on your phone, on your TV. Big screen TV, yeah. I just picked up a 78. What was that? I just picked up a 78. Big screen TV. So yeah, I can watch myself, but I can't because I'm actually working. Anyway, besides the point. All right. So yeah, it's being recorded at the moment. So if you have any questions, you can always, who did that? Starling! Woo! Thank you. If you have any questions, you can always go back and watch it over again because it's being broadcast as we speak. Romero! What's happening? Uh-oh. Yeah, hold tight. So that being said, let's take a closer look. Now, considering these numbers work, great. So we looked at the 1 year chart, fine. We looked at that, fine. Now we take a deeper dive into the chart. Okay, it takes 3 or 4 seconds to see if the chart's okay. The chart's okay, great. Now we go over here. It takes another 3 or 4 seconds. What am I buying it for? What am I selling? What am I making? Great, that's more than 1%. Now we're going back to the chart. Now I want to see, is it the right time to buy? All right. See, we know where the high is. We know where the low is. We know where we are. We know where we were. And we know where it is going. Simple, safe, predictable. Remember, it was created for a 9-year-old. Adults, you people, have a tendency to make it more complicated than it needs to be. Okay? It's very simple. Does it make sense? Well, do I like the company? Yeah, I like Siri. I actually own some at the moment. But let's go and see if it is a good opportunity for this week. And if it is, no, it's not a tip, and no, it's not a recommendation. It's just an observation. I'm just taking a look at the numbers, and I'm just telling you what the numbers say. And if you do this, this, and this hypothetically should happen. I always implore you to do your own research. Make sure things work for you, and never, ever, ever blindly listen to some idiot on YouTube. That would be me. I'm just passing along the information. If you like it, great, do it. If you don't like it, hey, it's just an opportunity. Now, number one, I'm not doing this for you guys. I'm actually creating a video diary for my children and my grandchildren. Because at some point in time, when I'm no longer here, they will have this information to look at. Say, how did Papa G do this? How did Papa G make all that money? How did Papa G? So this, hi guys. So this is for my children and my grandchildren. You just get to be here to watch and see how it's done. And then you can ask yourself, does this make sense? Is this something I should look deeper into? Because 1% a week is over 50% per year. Now, I have no idea how many of you people in the audience make 50% per year on a consistent basis. All right, anyway. Let's progress forward. All right, let's go to the chart and let's see what the chart is telling us. All right, a year ago was the high of the year, 33.15. The bottom of the year right there in the beginning of April, and that was 1869. Now look, from the bottom of 1869, shoots up to 25. 18 to 25, that's a $7 move. A $7 move on an $18 stock, what is that, 43, 44%? It's a nice move. Where are we? This thing keeps moving on me. All right, sit tight. All right, so that's the last 3 or 4 months. The low shoots up, pulls back, now it's going back up again. You can clearly see it. The high, the low, where was it? Where is it? What's the motion? Up, down, up. It's not that difficult. So let's keep taking a look. So that's the last 3 months, last 90 days. So let's look at the last 30 days, and that would be the 24th. Where's the 24th? 24th, here we go. So 30 days ago, okay, 1 month ago, 30 days, high, low, where was it? Where is it? Look at this. Down, up, down, up. Well, that's clear as a bell. Once you get to this point, does it make sense though? Well, if the high is here at 24, she drops down to here to 20. So 24 to 20. 24 to 20. That's a 20% drop. 20% drop. So from 20 to 22, that's 10%. Back up, and back down, back up, back down. Goes from here to here. Now it's going up. Does it make sense? Is this where I want to jump in? These are questions you got to ask. Question number one is, does it make sense? Edgar, woohoo, cool beans. Number one, does it make sense? Number two, do I like this company? Number three is, do I like this company at this current price? Number four, am I willing? Can I see myself buying this and selling a covered call every single week? Because the beauty of Siri is they have a weekly option. Check this out. 29 August, that's this Friday. 5 September, that's next Friday. 12 September, 2 Fridays. 19 September, 3 Fridays. 26 September, 4 Fridays. 5 October, 5 Fridays away. Every single Friday they have an option expiring, which means I can treat this thing like a cash machine, kind of like a vending machine that you check once a week. We're going to get into that. So hold on. So I like it, 2350. So let's see the 2350 and walk through it slowly, see if you understand it. So first and foremost, get rid of this. I don't need to see that. We're going to change this right here. Okay. Okay, these are all the different trading strategies. I'm only teaching one. Okay, I know all of them, but I'm not giving away all of them. I'm only giving away one. You know, I'm a nice guy, but I got to draw the line somewhere. And if 50% a year is not okay with you, well, I'm sure I ain't going to teach you the other stuff. This is the first one. Simple, easy, predictable. Once you get this one, then move on to something a little bit more complex. More complex, higher rate of return. Higher rate of return, more risk. It goes hand in hand. You can't get one without the other. You can't get high rates of return without a high risk. So 1% is not high risk at all. It's very low risk. It's one of the safest strategies. As a matter of fact, okay, you can check. No, don't believe me. But I'm going to throw it out there and write it down and check, see if it's true. A covered call is so safe they say you can do it in your government-sponsored IRA. Poet, didn't even know. No, seriously, it is so safe. A covered call is so safe you can actually do it in your IRA. Some trades you cannot do in your IRA. You can't buy options in your IRA, as far as I know, unless they change the rules. Most of these strategies you cannot do in an IRA. But the covered call, you can. That's the only one we're going to go over. So don't ask about anything else, because this is the only one I'm giving away for free. Okay? Got to draw the line somewhere. Now remember we said 2345. I want the 2350 right there, which is this number right there. That's what I want to buy right there. Now I'm actually doing two things at once. I'm buying the stock and selling the option at the same time, and it's called a covered call. Right there. All right. Here we go. This is, now, I always, every single one of my students, I tell them, listen closely. Always, always, always read the order out loud so that you can hear it. Because most beginners lose most of their money by hitting the wrong button. It sounds childish, and you're probably thinking to yourself, I ain't going to do that. I've been trading almost 30 years. I've hit the wrong button 4 times this year. So yeah, it happens. All right, so read it out loud. Buy one covered call Siri 100. That's the weeklies. 29 August 25. That's this coming Friday. That means this option is going to expire this Friday. So I'm buying the stock. I'm selling some of the option. And that option, they have the choice to do whatever they want between now or tomorrow morning and Friday afternoon, 3:59 p.m. Because at 4 o'clock, it expires. It doesn't really expire because it expires on Saturday, but you can't do anything after 3:59 p.m. So the $23.50 call option against the Siri stock at the market to open. Now it says to open because I'm opening 2 orders. It means I'm buying the stock that's being sent to New York. I'm selling the option that's being sent to Chicago. All at the exact same time. It's called a covered call. I want it filled first thing in the morning. That's why it is a market order. Now, a lot of people will say, why do you buy first thing in the morning? Shouldn't you wait a little bit to get a better fill? Yeah, you can. I don't. See, at this point in my life, I don't count the pennies anymore. If I'm making my 1%, great, I'm fine. So let's continue with the example. And then you got that big question on the back of your head. Does it make sense? Let's figure it out. Okay. So break-even point, maximum profit. You see that right there? It says maximum profit. 65.50. Now, 65.50 is profit for one contract. One contract profit 65.50 for 1 week, Monday through Friday. After Friday, well, whoever bought that option, they have the choice to buy that stock from me. I still get the $65 and I get all my money back. So think about it. I pay $23.44. All right. I sell it for $23.50. So $23.50 right here, $23.50. I collect this $65 for one contract. It's costing me my investment $22.85. Now the beauty of it, if it goes above $23.50, okay, I collect an extra 6 cents on the stock price between here and here. Okay, not a big deal. I get this money right here for the option premium. Now the option another flower. Woohoo! The voice. Wow! All right. The option premium is an insurance policy. Okay, now we all know how insurance works, right? Okay, every single week or every month you pay a certain amount of money and you get certain guarantees. All right, well, the guarantee here is if it goes over if it goes over $23.50, somebody has the right to buy it from me at $23.50. I get all my money back and I get the extra $65. But that doesn't tell me what my rate of return is. Well, let's get the calculator out. That will tell me what my rate of return is. Okay, what's happening with my calculator? There we go. All right. So remember I said 65.50 is a profit, 22 is what my investment is. So let's do the math. Your residence, hey, guess who's in the house? Hakuna Matata's in the house. All right. Take the profit, 65.50, and we're going to divide it by the investment. That will give me my rate of return for the week. 65.50 is the profit. Investment is 2285. Grand total, are you ready for this? 2.8% for 1 week. So hold on a second. If 1% a week is 50% per year, 2% a week is 100% per year. What's 2.8%? That's more than 100%, isn't it? Can you imagine that? Doubling your money every year? Freaking awesome. But does it make sense? If I buy Siri first thing tomorrow morning, I sell somebody the rights to buy it from me for almost the exact same price I just paid for it. Better yet, Siri is in an upward trend. We saw the chart. Remember, let's go back to the chart for a second. Wait a minute. Before I do, I want to show you something. Some of you are going to be like, holy shit. And some of you are like, oh, crap. All right, hold on. So, this price right here, $22.85. That is an all cash account. Now, I tell people never, ever, ever use margin until you understand the risks involved. Because margin is borrowed money. Okay? Never borrow money unless you really know what you're doing. Now, I've been doing this for 30 years. I will borrow as much money as someone is willing to lend me. I will even borrow money all the way up to 20% interest if someone will lend it to me. I have no problem whatsoever borrowing money from anybody and everybody. But here's the thing. I've been doing this long enough. I understand what the risks are. I've been doing this long enough. I have a set of rules that I refuse to break for anybody. Simple, safe, predictable, consistent. I'm only looking for 1%. I got that little greedy monster on your shoulder. Do it, do it, do it. Yeah, I got him under control a long time ago. Now, I could make a whole bunch of money sitting in front of my computer every day, but I don't do that. I'm past that point. I want consistency. I want predictability. I have two major goals in my investing. Okay? 1, consistency of profitability. 2, preservation of my capital. I don't have the luxury of being wrong. Sorry. So what I'm going to show you next is going to like holy shit. Hold on. Here he goes. Ready? So if this right here is all cash, this right here is margin requirement. So if and when you ever get to the point where your broker says, hey, you're doing pretty good. You want to try some margin? Think clearly. Okay? And if you do use margin, never, ever, ever use all of it. Now, I'm not telling you what to do. I'm just telling you what I've learned from my past. Now, you remember this year when Humpty Dumpty said tariffs and everybody panicked? This was back in April. The stock market dropped. That's what you saw. Hold on. Wait, I'll show you in a minute. Okay, in the first weeks of April, the stock market dropped because people panicked. Well, guess what? People panicked, stock market dropped. I got, I think, 3 or 4 margin calls. Like I said, I have 7 accounts. So yeah, I got 3 or 4 margin calls, which means I had to pony up some more money or I had to trade another strategy to avoid ponying up more money. So if you're going to use margin, don't use all of it. Make sure you have some for a cushion because stocks do go up and they do come down. So if you're buying on margin, make sure that when it comes down, you don't have to pony up some more money. So always, always be careful when you're using margin money. Now let me show you what the rate of return is for margin. Because I use margin every single week. Every single one of my account is a margin account. But I use it sparingly and I use it logically. I go by the numbers 1, 2, 3, A, B, C. All right, so clear that. Profit's still the same, 65.50. But the investment on margin is less, 11.22. So let's divide it 65.50 because the profit doesn't change. The profit on the position doesn't change. What does change is the rate of return depending on how much money you put in. Okay, so I'm going to divide it by 11.22 and look at the rate of return now. 5.8%. Now, my goal is 1% a week. That's my goal. That's what I'm striving for. But if Siri is going to offer me 5.8%, hell yeah, I'm going to do that. In fact, I'm going to write that one down. And no, that's not a tip. No, that is not advice. That's just an observation. Okay? I'm just reading the numbers, what they say. Don't buy it. Do research. Research until you decide if it's right or not. All right. Next. Okay, so hopefully that made sense. Let's get rid of all this. Let's get rid of that. 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 Back to this and back to this. Let's go on to the next one. Now, the next stock you guys want to take a look at was Kohl's. All right. I love Kohl's. I made a lot of money on Kohl's this year and last year. Here we go. Now, like I said, 3 to 4 seconds. High, low, where was it? Where is it? Okay, down, up, down, up. Really not that difficult, right? So yeah, that part worked. Next, we want to take a look at the numbers. The big number on the board, 1389, 1389, 1389, 1389. 1389, closest one is going to be the 14. The 14 is going for 96. Did you hear that? 96. How much is 96 cents on a $14 stock? Well, 1% is 14 cents. 2% is 28. 3% is 42, so on and so forth. This has got to be easily 5%, easily. But take a look at the numbers. So yeah, that worked. Now let's go back to the chart because it's actually simple. 3 to 4 seconds, great. 3 to 4 seconds. What's it at? What am I buying? What is it? That's more than 1%. Great. Next. Just because, yes, now I want to take a deeper dive and see, is it the right time? So let's take a look. Now, we have some pretty good support right here, or resistance. Okay? Let's count them up. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. 7 times it refused to go to 22. So what do you think? You think 22's resistance? It's like, it's just not going higher than 22. We're at 1389. We got plenty of space to go there. So let's go a little deeper. A year ago, we're at 1988. We topped out at 2132. Remember I told you, the bottom of the year, first week in April, you're going to see this in almost every single stock. First 2 weeks in April, there's the bottom on almost every single stock this year. You'll see it. Remember in 2021 when we had that jabby thingy? Yeah, the third week in March, everything had a bottom because the market fell apart when they announced it. Anyway, so here's the bottom of the year. What do you think? Seriously, here's the bottom. Look, it's going up. Okay, great. Let's look at the last 30 days because the last 30 days gives me a better idea of where it's going next. Okay, here's the last 30 days. Same thing. High, low, where was it? Where is it? Down, up, down, up. Now, I like 2 days to the upside. Okay, I like 2 days to the upside because see, here's the top here. Here's your new bottom here. It's only 1 day here. That's just one. I like 2 days and then I jump in on the third day, which then has me way up here. So I'm going to say, as much as it's offering, do I want to jump in? But that's the last 30 days. Okay? She jumps up. There's your profit taken. Now she's going up again. Let's jump back a little bit. Okay? Here's the high of the year. Here's where we are now. We have all that room to go. We're here, and she can keep on going. So you need to ask yourself that questions, those 5 questions. Does it make sense? Do I like this company? Do I like this company at this current price? Now, remember part of Rule 1? If it's not on the list, don't buy it. Well, also, Rule 1 is if you don't understand it, if you don't want to hold it for the rest of your life, if you don't know who they are, what they do, don't buy it. So it does have a lot more space to go. And yeah, it goes up, profit taken, up, profit taken. Now she's going up again. Does it make sense? Do I like this? Do I like it at this price? A lot of interesting questions. I got to prove that I'm normal. Here we go. Slide the puzzle piece right there. There you go. All right, so let's do a 14. We're gonna do it again. Second one for the night. Kohl's 14 right there. And just one contract at the market. And here's Johnny. Buy one covered call of Kohl's 100. That's the weeklies. 29 August 25. That's this coming Friday. 14 call option against the Kohl's at the market to open. Blah, 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 blah. Here's the profit. Here's the investment. Let's see what the numbers look like. Because the numbers are what the numbers are. It either makes sense or it doesn't. Remember Rule 5? Make sure the numbers work. What am I buying? What am I selling? What's my return? Does it make sense? Yes, no. Well, let's take a look. $111 per contract. 111 divided by $1,289. Well, 8.6%. That's not even on margin. But that question gnawing at the back of your head, do I like Kohl's? Do I like Kohl's at this price? Am I willing to buy it and never, ever, 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 ever sell it for less? Do you remember Rule 2? Never sell at a loss? If I'm buying it now at $13.79 or whatever the hell it is, am I willing to hold it for the rest of my life, do a covered call every single week, bring in some money every single week, never sell it for less than what I paid for it? Those are some big questions you got to ask. It's kind of like, do you promise to love, honor, obey, blah, 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 through sickness and health, through death do you part, blah, blah, blah. Same thing. If you're going to invest, is this where you want to put your money? Now, the nice thing about it is it has weekly options, which means every single week I can get something. So this week, it's offering me 111. Well, it might offer me 90 next week. It might offer me 50. It might offer me $132.23. I don't know. But it does have weekly options, which means every single week there's an opportunity for me to bring some money in. Well, think of it this way. Think of it this way. What if that's a vending machine and the vending machine cost me $1,289? I put it on Main Street and First. You know where Main Street and First is. Okay, this week it's giving me 111. Great. Next week, let's move it to Spring Street and Summer Street. Who knows what it's going to get next week? Because the stocks go up, stocks go down. Okay, the numbers change. Now, what never, ever, ever changes is the fact that I own 100 shares at whatever price this is. That price never changes. But the stock price will go up and it'll go down, go up and go down, which means the option prices will change, which means the rate of return will change. But it's usually right around the same because my goal is 1% a week. This is offering 8.6. I think I might do some Kohls next week. Why the hell not? Anyway, next, that's not even a margin. Look, $12.89 is all cash. 872, that's on margin. That's a hell of a lot less money. But do you like Kohls? What's going on with Kohls? Have you been following Kohls? Is this a company you're willing to buy and hold on to? They're all good questions. Next. All right, let's get out of this. Let's get out of that. Let's go back to here and let's answer some questions. Look at Snowflake. Why? Why the hell do I want to look at Snowflake? S-O-N-W, Snow. S-N-O-W. Okay. High, low, where was it? Where is it? Up, down, up, down. What's going on here? But before I do you remember what I said earlier? Most people want to look at something and it's like, what the hell were you thinking? So one piece of advice I always give, if you're going to be investing, you need to have access. To a financial website. Now, I use Yahoo Finance. You can use whichever finance site you want, but Yahoo Finance tells me a lot of interesting stuff. All right, so we're going to take a look at Snowflake, on the Yahoo Finance website. And we're going to see, are they profitable? Because you need to know what to look for before you buy anything. Okay, so here's Snowflake. Come on. All right. So here's Snowflake. Do you see this right here? Earnings per share, -4. Earnings per share, -$4.19. I didn't make it up. It's not my numbers. Okay? -$4.19. Dividend, 0. Dividend date, 0. So explain to me, why the hell would I want to invest my money in a company that has a $-4 per share? -$4. Yeah, I'm going to say no. Okay, the Magnificent. This dude is on another app. Yeah, the Magnificent. I'm on 9 other apps. So just chill, relax. What? Okay, yeah, we already looked at that one. That's going to be a big fat no. What else do we have here? Howdy, hi. Kohls. We just looked at Kohls. K-Van, how you doing? Romero, how you doing? Bishop wants to take a look at Archer Aviation. ACHR. ACHR. Let's take a look. Okay, Archer Aviation. -$1.27. No dividends. Okay, no dividends. So why are we looking at it? Okay, the name of the channel is Dividend Investing for Weekly Cash Flow. So Snowflake and Archer Aviation didn't have any dividends, and they have negative earnings. Why the hell would I put my money into a company that has negative earnings? Simple question. Very intelligent advice. Thank you for that, Starlingo. What else we got? Very good, sir. 555. What are we looking? What are we looking at? Blah, 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 blah. All right. What else do we have for questions? Zeus. Good evening, Zeus. Starling, thank you. All right. World you want to live in, girl. You got to change that name, honey. You do. It does just happen. Okay. Again, I have 9 different channels, which means I have a whole bunch of different questions coming in. So as much as I want to say I understand what you're saying, I have no idea what you're saying. It does happen. I have no idea what it is and why it's happening. So let's keep on going over some of these questions. T. Rowe Price. Someone wants to take a look at T. Rowe Price. Hold on a second. Ooh, the Dow. Yeah, no. Wall Street, blah, blah, blah. All the way from Washington, D.C. Cool beans. Good evening. Yep. Okay, Lionel wants to take a look at Spiders, SPY. And I'm going to explain to you why I don't like Spider, SPY. SPY. All the information I'm showing you is absolutely 100% free. You just got to know where to look for it. So Yahoo Finance is free. You can go anywhere you want to find whatever information you need in order to make a decision that makes sense to you. So why don't I like SPY? Spider, S&P 500 ETF, SPY. It's $645 per share. Number one, I don't like paying anything over $250, but let's keep on progressing. So number one, check this out. The yield 1.13. You should be able to know where the numbers are for stuff you want to take a look at. So why are you investing your money into SPY if the yield is only 1.13? You know you could put it into a CD and get better than that. Because I believe CDs are paying more than 1.13. But hold on, SPY actually gets worse. It does. Hold on a second. So, like I said, Yahoo Finance, you can find a lot of financial information. Check a look at this right here. Historical data. So let's take a look at historical data to see how consistently profitable they are when they're paying out 1.13%. Okay, sit tight. Here we go. It's going to pop up. There it is right there. Now, historical prices right there and the dates right there. So I want to change that to dividends only because that's what I'm interested in. Because a dividend, if you didn't know, a dividend is the portion of the profits the company makes that they give back to us, the investors. So I'm looking for cash flow. We check every single week. We haven't checked this week yet to see how many different companies are out there that we can invest in. Now, out of all those companies, last week it was 10,340. Let's find out right now. Why not? Why the hell not? FIN right there. Now, I use FinViz to tell me how many stocks there are available. Right there. There it is. The number I'm looking for is right here. 10,356. They've added 16 new companies last week. So this week there's 10,356. Okay. Now, let's see how many have dividends. So if I click on right here, dividend yield, a positive dividend right there. Doesn't have to be big, doesn't have to be small, just a dividend. Right there, 5,866. So out of the 10,346, 10,346, whatever it was, only 5,866 are paying a dividend. Well, how many paying a dividend over 5%? 1,416. It doesn't tell you how profitable they are. It just says that this year they're paying that. All right. So that being said, we're back here to check out the dividends on SPY, Spiders, SPY. So I want to see all the dividends, right? Maximum. Now, remember I said earlier, I want 2 decades. That's 20 years. So 20 years ago was 2005. So let's take this all the way back to 2005. Right there, 2005, right there. March 18th, 2005. Now, I could go back further, but I just want 2 decades. So when I say consistency of profitability, the number should get higher and higher and higher, correct? So if I make more money this year than I did last year, and I made more money last year than I did the year before, and I made more money that year than I did the year before, so the number should get higher and higher and higher, correct? It's either right or it's not. Okay, so here we go. So here's a way of looking at it. As a retiree, okay, I live on what is called a fixed income. Well, I'm supposed to live on a fixed income. Mine fluctuates. Sometimes I get 1%, sometimes I get 2%, sometimes I get 3%, but my goal is 1%. Because 1%, I'm good. Anything over, hey, gravy. All right, here we go. Let's take a look at the numbers, and hypothetically speaking, I could be wrong, but hypothetically speaking, these numbers should get higher and higher. Ready? Here we go. 46, 48, higher, 52, higher, 67, higher, 51. Hold on. I admit, I did not go to college. You're actually listening to someone who didn't go to college. So the highest education I have is 12th grade. But I tell you what, in 3rd grade, 1973, I could tell you that 51 is lower than 67. You don't have to be a brain surgeon to know that. Okay? 51 is lower. So that went backwards, didn't it? Look, 46, 48, higher, 52, higher, 67, higher, 51, lower. Which means they made less money this year, 2006, than they did in 2005. That's all that means. They made less money. Wait a second. Aren't we doing this for companies that consistently profitable? Okay, so they were profitable, but less profitable. So then it went backwards. All right, here's another way of looking at it. Let's say, hypothetically, you're retired, okay? First check you get, $4,600. Next one you get, $4,800. Next one you get, $5,200, $6,700. That looks good because it keeps going up. Well, now I'm getting 51. Hold on. Why is it going backwards? It gets worse. Hold on. Okay. 51, 55, higher. 57, higher. 79, higher. 55, lower. So that's 4 steps forward, 1 step back. 3 steps forward, 1 step back. Hold on. It does. It gets worse. Okay. 55, right? Right there. 65, higher. 71, higher. 77, higher. 64, lower. That's 3 times. 66, higher. 69, higher. 71, higher. 56, lower. So that's 4 steps forward, 1 step back. What is that? The Wall Street Shuffle? 4 steps forward, 1 step back. 4 steps forward, 1 step back. Yeah, I don't do spiders because they're not consistently profitable. We can keep on going. 51, 50, lower. 49, 59, higher. 48, lower. 53, higher. 60, higher. 65, higher. 55, lower. 62.8, higher. 62.5, lower. 77, 61, lower. 68, 77, 102, 69, lower. 4 steps forward, 3 steps back. 2 steps forward, 1 step back. Yeah, no, thank you. I don't like spiders. They're not consistently profitable. Simple. No. No. Nope, niet, nada. All right, so hopefully it does one. Oh, it does just happen. Okay, got that one. Don't. All right, Starlingo. Andy the one, cool bean. Joaf. About to turn 18. What's your advice? Education. There you go. That's my advice. The crypto mic drop. Hello, coach. Hope your day is good. My day was pretty good. We did a lot of nothing today. Went to church today. Had an awesome lunch today. Ooh, Wyo Clip wants to take a look at Nike. We will in a second. Let's take a look at some of these questions first. Teach me something, nerd. That's funny. What's up? How's my day? Ooh, TJX. Milton wants to take a look at TJX. Who is the Unk Diva? Cool beans. Hold on. Hold that thought. Hi, Dave. What's going on? Schmida. Schmida's in the house. Bum, 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 bum. All right. He cracked the code. Why was a larger option not correct? Andy, it's strictly a numbers game. Okay? You go for a higher option, yeah, it's going to be more profitable, but there's going to be more risk. It's a risk-reward ratio. Which one is safer? Which one's more predictable? Which one is more consistent? Ooh, Drezik wants to take a look at Cracker Barrel. All right. Take a look at Cracker Barrel in a minute. Tanya, good evening. Joey V, do you ever trade any of the Mag 7? You're going to have to explain to me what the Mag 7 is. Okay. JTM, good evening, JTM. Lauren, good evening, Miss Lauren. Michael Reed, Andy. I'm confused. Why didn't the larger option not work? There's a 6-cent difference. Say, Andy, I didn't say it didn't work. Okay, I said you got to choose which one right for you. I like the lower option, the one that's further in the money because it's safer. Okay, when you get to a certain point, safety is more important. How difficult is it to have 100% of your money invested? It's not difficult at all. It's just risky. Because if you're on all cash, yeah, 100% is fine. But if you're using margin, no, never. Because stock goes down and you're 100% invested on margin, you're going to get what's called a margin call. It's Joey V. It's always going to be a numbers game. All righty. You showing the junk in the trunk for free. Ham sandwich, how you doing? What candle time frame are you using? 1 day. System not perfect. Also, your target story. Ask Lemonade. You're 100% correct. It's not perfect. Maddie, what's up? Where are their skinny jeans tonight? This is Florida in August. Okay, who wears skinny jeans, Florida in August? Joey V. If you can only manage options on 50% of your income, you might only gain 25%. The Mag 7 will return more. Thank you, Joey V. But Joey V, I invest 80%, 70 to 80% of my money because I'm on margin. But think of it this way. Let's say I have 100 grand, all right? 100 grand. And then my broker gives me 100 grand on margin. So now I have 200,000. I could invest all 200,000. That would be 100% in all in, okay? But no, I don't do that anymore because of TDS. You know, that Trump derangement syndrome people get. He says something stupid, stock market drops. I don't want to be in that situation again, okay? So I leave a nice cushion, 20 to 30% cushion, just in case the stocks pull back. All right, Joey V? And you haven't told me what the Mag 7 is. So tell me what the Mag 7 is, and I'd like to see the consistency of the Mag 7. Do they get more than 50% every year? I don't think so. Johan, what's happening? Namadi, what's going on? Dan, David, JG, how much money did you make on Kohl's? I have no idea. Okay, so I don't look at it that way. I look at what's happening this week. What are the numbers this week? Does it make sense this week. Okay. What do we have over here? Can you say, all right, Battalion Bully doesn't respect, oh, don't disrespect the guys. Thank you very much, Battalion Bully. Read the financials. Todd, I'm going to agree with you. You look like, okay, thank you. Tell the 9-year-old to buy high and sell low. Yeah, A1 steak. Pfft. You look, okay, thank you. I'm learning, dude. Give me time. Take your time. No hurry. Keep telling us the story of teaching your daughter every week. Awesome. Thank you. You have the perfect voice for news. Thank you very much. And that's the way it was. Anyway, let's keep on going. All right. There. Cracker Barrel. Let's take a look at Cracker Barrel. Let's get out of here. Wait a second. Cracker Barrel. Does Cracker Barrel have options? And if so, CBRL. Let's see what they look like. Okay. Cracker Barrel, Old Country Store. Ooh, they do have dividends. Nice. All the way back to 2005. Check this out. Hold the phone. 2005, 12 cents. 2006, 13, 14, 18, 20, 22, 25, 40, 50, 75, $1, $1, $1.10, $1.15, $1.20, $1.25, $1.30. Uh-oh. $1.30, 25. Whoa, ho, the phone. Goes from $1.30 down to 25 cents. They were doing good right up until the end of 2024. Look, $1.30 right until July 2024, and then they decreased it. Ooh, wow. Over 80%. That's horrible. Sorry, dude. If company is going to decrease their dividend that much in just the last year and a half, I'm going to have to pass on Cracker Barrel. Sorry. Next. Nike. Let's take a look at Nike. Just in case you're wondering, I did buy some Nike last week. The numbers just look too good to pass up. Here we go. Alrighty. See, you could probably see it. Reason why I bought Nike last week. Look. Okay. High, low. Where was it? Where is it? Look at this. Sideways, down, up, sideways. Now, actually, it's in an upward trend. 78.38. 79 right there, 90 cents over 1%. I could do it every single week. Look, 1% on the 29th, 1% on the 5th, 1% on the 12th, 1% on the 19th, 1%, every single week. But the big question, does it make sense? That's number one. Number two is, do I like this company? Question number three, do I like this company at this current price? Well, the high of the year is $90. Right now, we're at 78. We still got a long way to go before we get to the high. So what does this area right here look like? Is that telling me it's the right time to jump in to Nike? All right, well, let's find out. A year ago, we're at 83. The high of the year was the end of September, and that was 90.71. So from there, here we go. You're going to see this from now on to who knows when. The bottom, first 2 weeks of April, shoots up nicely. Okay. Last 30 days. 24, right there. Here's your last 30 days. Okay. High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up. Well, right here, we're at 78.38. The high is at 80. Do you think it can keep going? Well, the 1 year chart says yes. The 30-day chart says, I don't know. It all depends on what you like. Now, I bought it 2 weeks ago down in this area here. So I'm okay. Well, because see, I do this every single week. As a matter of fact, I look every single day. And I have been looking every single day for the last 30 years. Because I understood 30, 40 years ago that, yeah, we're the only species on the planet that's got to pay to live here. So if I want a halfway decent life, I got to pay for that. Right? You want a halfway decent life, you got to pay for it. So what do you do with your money? How do you earn money? And once you earn it, what do you do next? Because whether you like it or not, whether you agree with me or not, at some point in time, you will retire, which means your money's got to come from somewhere. And you only get two choices when you retire. Only two. Take responsibility, do it yourself. It's not that difficult once you understand it. Number two, give it to someone else. Let them do it for you. One or the other. There's two choices. If you have enough money, give it to someone else and they pay you 3, 4, 5, 6% a year and you're okay with that and you can live comfortably on that, good for you. I can't. I cannot live on that 4% draw that everybody says. Well, you give us your money, we'll make sure you get a good, comfortable 4% draw for the rest of your life. I'd still be working. Because what I have, however much money you think I have, I don't. I cannot live comfortably on a 4% draw. I'm telling you honestly, I cannot live comfortably on a 4% draw. If I had $1 million, a 4% draw is $40,000 a year. At 1% a week, $1 million, that's $10,000 a week. That's $500,000. I can live comfortably off of that, but it's not the case. Anyway, next. So I'm going to say no to Nike, even though I already own it, because I've got it down here and it's going up. It doesn't make sense for me if I was going to get into a new position, okay? Because the high is right here at 80. 78.38 is the current position, which means it's not that far off. Can it keep going up? Yeah, it can. Is it going to? Well, the bottom's here, and she's already went from 72 to 79. So from the bottom, 72, to the current position right here, 79, that's a $7 increase. $7 increase on a $72 stock. That's just a little bit less than 10%. So 10% jump there. Yeah, no, thank you. Sorry. Hollywood wants to take a look at Vale, V-A-L-E. V-A-L-E. I got to click on this first. V-A-L-E. Interesting. Take a look. High. Look at this. Low. First week of April. Up, down, up, sideways. We're at 10-12. We do a little. Okay, cool. 10-12. The 10s are going for 20. Take off the 12 cents, 8 cents. Nah, nope. Sorry, dude. Numbers just don't work. Hollywood, you see that? The current price, $10.12. If I sell the 1050s, I'm walking away with 3. No. If I sell the 10s, I'm losing 12 cents right off the top. I'm walking away with 20 cents. You take 12 off there, walking away with 8. That's less than 1%. Sorry, Hollywood. No to Vale. For me, anyway. If you like it, you do it. The number just doesn't look right to me. What are you, a scientist? Capital efficiency. Todd, how are you doing? I like the way you explain this. Thank you, Mr. T. Tablet. Cool beans. You have perfect voice for news. I thank you. Okay. Mama, going to take the kids and leave you. Well, A1 steak sauce. I hate to be the bearer of bad news, but my kids are all in their 20s and 30s. Hey, Binky says hi. How's it going, Binky? Antero, midstream. Todd, you got to give me the ticker symbol. Hi from India. Namaste. Do you think SPY is still good long-term investment, and are there any better ETFs to consider right now? Okay, so Lionel, you didn't see the example I gave on SPY. SPY has a yield at the moment of 1.13 per year. 1.13 per year. I'm showing you, Lionel, how to get 1% per week, but you're interested in SPY, and that's paying 1.1 for the year, okay? Inflation is going to eat you alive, brother, because inflation is higher than 1.1. I'm 33, 50,000 in savings, 15,000 invested. What next? Goin, how are you today? Now, Goin, I don't know anything about you, so I cannot really give you any advice other than education. Educate yourself. Come up with an idea of what you want and then work towards it. Stay focused on one strategy and one strategy only. You want to buy gold? Great, buy gold. You want to buy silver? Buy silver. You want to buy stocks? Buy stock. You want to do crypto? Do crypto. Find something and get good at it. Okay? Todd, capital efficiency will tell you if they're profitable. Okay, Todd, thank you. But Todd, I like looking at it through the lens of a 9-year-old. Okay, because that's where the strategy came from. Do I buy a company and I sell it for the same price I paid for it, get 1% per week? That either makes sense or it doesn't. Okay, why should I add more to her plate? Remember, she's 9 years old. How do you keep it 9? No, besides the fact of teaching her the strategy, that's number one. Number two, you want me to throw stuff at her that has nothing to do with what we're looking at? Try drinking turkey milk for lean protein. Ugh, doesn't even sound good. Goin's got 110 in his 401k. I feel bad for you, brother. I really do. Because you probably haven't read the fine print of that 401k. All right, let's keep on going. What else do we have? What else do we have over here? Oh, Joanna wants to take a look at the gap. Oh, wait a second. Someone's before Joanna. They won't look at Andy. Andy wants to take a look at Johnson & Johnson. Andy, I think I bought Johnson & Johnson once in the last 30 years. Okay? Hell no. Do you see that? That's the high of the year, brother. Why would you want to buy anything at the high of the year? As a matter of fact, keep your eye on it. When that profit taking starts and it comes back down to here, then it might be a good idea. Just a thought. Joanna, the gap, GAP, fall into the gap. Ooh, interesting. Look at this. High, low, where was it? Where is it? Look at the movement. And look at this right here. Awesome. That's worth getting off my seat to take a look at this one. Let's take a gander at this one, Joanna. Okay, high, low. Look at it, the low. First week in April. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up. So it's in an upward trend, 2142, 2142, 2142, 2142, closest one, 2150, $1.26. That's about 5% for the gap. Do you like the gap? First question, do you like the gap? Well, let's find out what the numbers look like. Well, the chart, the 1-year chart looked okay. This looks okay. Let's go deeper into this. And is this the indication that I want to jump in? Well, let's take a gander. A year ago, 23.79. Bottom of the year. Remember I told you? First 2 weeks in April, TDS right there. Shoots up. Big gap down. Now, here's something I tell people all the time. Listen closely. This is kind of fun and interesting and funny. Okay? You see this? Here's the bottom of the year. Shoots up. It goes from 17 to 29. That's $12. That's like a 75% increase. 75% increase. So, here's a little tidbit of advice. Not really telling you what to do, but if you buy something, it shoots up like this. If you do not take your profits, do not be surprised, shocked, amazed, appalled, disappointed, all that negative crap, if the market maker takes it away from you. I laugh my ass off. Everyone, oh, I just bought this and just tanked, lost all the... It's your own damn fault. Tell you why. You buy down here, shoots up, you take the profit because it's not a profit until you take it. Just like on the flip side, it's not a loss until you take that. So remember I say no way to lose? The only way my daughter could ever lose is if she made the conscious decision to sell for less than what she paid. Okay? If the stock jumps up, you don't take your profit, don't be surprised if the market maker takes it away from you. Two things. Number one, it ain't a profit till you take it. Number two, nobody ever went broke taking profits. Okay? So she shoots up, comes down, goes sideways. Look at this movement here. Okay? Down, now we're back up again. Great, we're here. Okay? On the 90-day chart, because this is 90 days, last 4 months, see? April, May, June, July, August. This is where we are. Okay, that is an upward trend. If I'm looking at this, yeah, it should keep on going up. Let's see what the numbers look like. Okay? Get out of that. 2342, going to do the 2150. Covered call, 2150. There it is right there. One contract. That way you can decide, can I do one? Can I do 5? Can I do 115? We're all different. We all have different numbers. We all have a different amount of money to work with. Here's Johnny. Buy one covered call, the gap, 100. That's the weeklies, 29 August. 2150 call option against the gap at the market to open, blah, 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 blah. $105, 2,000 bucks. Let's see what those numbers look like. Okay, calculator. Okay, $105 profit. Okay, maximum profit, 105 bucks. Divided by 2,045 gives me a grand total of 5. Oh shit, I'm writing that one down. 5.1. All right. That being said, does it make sense? I'm only looking for 1%, but do you like the gap? Does it make sense? Is this a company you want to put some of your money into and hold on to and just keep doing covered call every single week until it hits your target? What's my target? 2150. What's it at now? Well, let's get rid of that. 2142. It's currently at 2142. The stock is in an upward trend. My target's 2150. Well, okay, that makes sense to me. To me, it's not a tip, it's not advice, it's an observation, it's entertainment. I sing, I dance, la 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 la. Okay, not advice. Listen closely. Not advice, not a tip. Just an observation. Somebody want to look at the gap? We looked at it, we saw the numbers. That's what the numbers told me. Okay? Okay, let's delete this. Let's go back to here. Go back to here. Joanna wants to take a look at Target. Ooh, we looked at Target last week. They had a big black swan. Okay, we were watching it. Now, for those of you who don't know what a black swan is, this right here. That's a black swan. And it's here and it's here. It usually happens right around earnings. Now, for those of you who haven't seen my example of the black swan, let me briefly explain it to you, all right? So, first and foremost, the bid and the ask. You need to understand the bid and the ask. The bid is what you can sell for. The ask is what you can buy for. The difference between the two, the bid and the ask, is called the spread. Oh, who's that? Starlingo, woohoo! Is called the spread. That's how much the market maker makes. Bo wants to take a look at Marvell. We'll take a look at it in a little bit. Ooh, Pepsi. Haven't done that one. Gap. We already looked at that one. Oh, battery's low. Let's unplug this one. Plug that one in. I do like my Apple phones. I do, because I'm screaming on 6 Apple phones. But here's the thing. The cords, those lightning cords, It's like I got to replace them every 3 or 4 weeks. And the phones do anything. They just sit there all week. Like you sit. Okay, anyway, here we go. Target. I'm going to explain to you the market maker and what the market maker does. All right, so let's get rid of this. Let's go right here. Okay. So, my friends, this is 1 year. This is target. See? Earnings. Or that's not it. Here's another one right there, and here's another one right there. They're called black swan. I'm going to show you this right here. That's called a black swan event, where a huge drop because of 5 words. And I'm going to explain those to you in a second. But before I do, check out the bottom here. There's blue lines down here. Okay, those blue lines down here, that represents volume. How many shares are traded on a daily basis? Because the market maker earns his money or her money, equal opportunity here, by buying and selling. That's all they do. They buy, they sell, they buy, they sell, they buy, they sell. Okay? So the spread, the difference between the purchase price and the sales price is usually 1, 2, 3, 4 cents. Some of that. Let's just say 2 cents. Okay? 2 cents for each and every share that trades. Okay? Each and every share that trades. Okay, so let's take a look at the average. Right about there. Okay, that's the average. Right there, see it? That's the average. 5.5 million shares every day. So we're going to need the calculator for this one. You ready? 5.5 million shares a day. Let's clear this. 5.5 million shares. There you go. Now, remember, the market maker makes the spread. If 5.5 million shares are traded every single day, and the market maker makes 2 cents for each trade, for each share, multiplied by 0.02, 2 cents a share, the market maker makes on average $110,000 a day. That's what the market maker makes. That's his job. Now, don't go out thinking you're going to get one of these, because last I checked, about 20 years ago, it was $350,000 just for the application to become a market maker. It's very pricey to become one. But then again, look at this, $110,000 on average. Now, remember I told you, right here, this big drop, this right here, black swan. What happens? Let's zoom in. Okay. So the stock price is here, 156.28. Now, remember I told you earnings right there? That little dot right there, that's earnings. We didn't hit our target. 5 words. We didn't hit our target. The market maker gets those 5 words. We didn't hit our target. And then what does he do? He drops the price from 156 down to here, which is 120 whatever. Okay? 150 to 120, $30 drop. That's not it. It gets worse. Watch this. So we didn't hit our target. So what is that worth? Those 5 little words. Okay, this particular day right here, that's the volume. See how big it is? See this big spread there? 65 million shares traded that day. Let's bring up that calculator again. Okay, 110. 65 million. Whoops, clear. 65 million. Multiply, same 2 cents, that's what he makes, 1.3 million. So listen closely, okay? The market maker gets a little email, a text, letter, whatever information, however he got the information, we didn't hit our target. That's it. Earnings report wasn't what he thought it was going to be. We didn't hit our target. Those 5 little words, $1.3 million, 2 to the market maker. Now, what he doesn't tell us, these 65 million shares that traded that day, are those people panicking? We didn't hit the target. Oh, world's going to end. Did the market, did the, oh, wait a second, did the CEO get on the phone? Hey, Joe, yeah, I know you only sweep the floors and you mop it up. You do a great job. By the way, we didn't hit our target. Take a couple of days off until everything turns around. Does he call up Sally, the secretary, who answers the phone? Yeah, Sally, guess what? We didn't hit our target. Why don't you take a couple weeks off until things turn around? Do they call the manufacturer where they get all their supplies from? Hey, we didn't hit our target. Let's not buy all that stuff. No, nothing happened in the company. Absolutely nothing. Okay, you go to Target. People still there. People still buying. See, people still stocking the shelves. Cashiers still selling crap. Nothing happened. Only thing that happened was corporate says we didn't hit our target. Market maker says, oh, shoot, I need a new house in the Hamptons. So let's drop the price, get this volume pumped up, make $1.3 million for the day. I don't like the market maker. He's the only one, or she, equal opportunity. They get information on the company, and out of all the numbers, there's only 5 numbers you need to worry about. The opening price, high of the day, low of the day, close of the day, and the volume. Those are the 5 numbers you got to worry about for the stock. Opening price, closing price, high of the day, low of the day, and the volume. Only one of those numbers is created by one person. You ever remember that song from a long time ago? I got the power. Yeah, the market maker has the power. He has the power to take it from 155, and we didn't hit our target, drop it down to 120 and make $1.3 million rather than 110. That's what I think of the market maker. It's the only number. The only number that is created by one person. Anyway, let's get out of that example and let's go back to Target and see if it's a good opportunity. Trade. Back to here. All right. So remember we said a new black swan happened last week right here. We didn't hit our target. So here's the volume, the average volume, 5 million. Look at another 30, 40 million shares traded this day right here. Big drop down. Now 2 days to the upside, which means tomorrow would be perfect because these right here, gap downs, have a tendency to fill. Got a couple questions to ask yourself. Number one, Target's over 100 years old. Target is a dividend king. They have increased their profitability year after year after year for over 5 decades. Not 5 weeks, not 5 months, not 5 years, 5 decades. Don't care whether you like them or not, whether you shop there or not. It's totally irrelevant. They have been consistently profitable for over 5 decades. Okay? It either makes sense to you or it doesn't. Here's the average range right here. This is going to fill. Whether you agree or not is irrelevant. Gaps have a tendency to fill, especially when it looks like this. Okay, here's the bottom here. Wednesday. Thursday's higher. Friday's higher. Tomorrow, if she's opening higher than 99.24, that's my cue to jump in. So I want to take a look at the 99s because the 99s are going for 163. That is more than 1%. Of course, if you like Target. And that's always a big question. Does it make sense? Do I like this company? Am I willing to buy it and hold on to it and never sell at a loss? Anyway, next. Gap. All right, what else do we have up here? That's it? So we caught up. Joanne, I hope you liked that one. Cracker Barrel, we already did that one. No questions there. What do we have here? Still struggling with that. Jameson, I'm not quite sure what you're struggling with. Let me go backwards for a little bit because I missed a lot of these questions. Ooh, Bear wants to take a look at Tesla. Bear, I have no idea why you want to look at Tesla. Tesla does not have any dividends. TSLA. Now, because Tesla TSLA. Now, because Tesla doesn't have any dividends, we have no idea when it normally moves. Some of you probably saying, what does that mean? Well, here's the thing. The reasons why I like dividend stocks. Okay, this here is an EX dividend calendar. See, August 2025. Each one of these little green dots, each one represents a company that has consistently increased its dividends or has a dividend to pay. 4 dates to remember. Announcement date. That's when they say, hi, everyone. This is how much money we made. This is how you're getting yours and when you're getting yours. It's the announcement date. They tell you what they made, what you're getting, and when you're getting it. Just the announcement. That's it. That's one. Number 2, the EX dividend date, represented by these little green dots. Okay, look at them all. The little green dot represents the date, the very last day the stock trades before the dividend is paid. Date number 3, date of record. Whoever owns the stock on the date of record gets the dividend. Date number 4, the payment date. That's just when you're getting your money. So a dividend not only tells you if the company is consistently profitable, yes or no, well, it also gives me a cue or an indicator. Because most of the time, most of the companies that I look at have a tendency to go up in value just before the dividend date. So let me get to a better list. That's just all of them. That doesn't mean anything. This list right here does. These little green dots are all the companies for the month of August that have increased their profits for at least 25 years. That's a quarter of a century, 25 years. Who do we got? O Realty, Fast Terminal, Granger, Target, Consolidated Edison, Clorox, ExxonMobil, Emerson Electric, Walmart, Dover, Nexteria, General Parts Corporation, GPC. 7 decades of increased profits, GPC. Kimberly-Clark, Pepsi, Lennar, Ben Franklin, Stanley Black & Decker, Johnson & Johnson, 3M. I'm sure you heard of most of those. Those are the companies that I like. Household names. You probably heard of every single one of them. Granger, maybe not. 3M, probably. Pepsi, definitely. Johnson & Johnson, of course. Mickey D's, most definitely. Those companies have been consistently profitable for 25 consecutive years. That means their dividend is higher, 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 higher. Why not? Next. What's next? What do we get to look at next? Oh, yeah, so beer. That's one of the reasons I don't do Tesla. Andrew sent me a message. Thank you, Andrew. I'll take a look at that in a little bit. Okay. Let's move on. We got a half hour left. What kind of questions do we have? 24, 22, we got 40 some odd questions. So what do we got? MNMUU. What is the delta for weekly? I'm going to give you a phrase that I heard from Bill Paxton. Him and Tom Cruise were in a movie. Okay? Answer to your question? Don't know, don't care. It either works or it doesn't. The numbers work or the numbers don't. Am I making my 1%? Yes or no. Is the stock going on an upward trend or is it going on a downward trend? Simple. Filthy McNasty. What an interesting name. How do I like TAP? Is that Tapestry? T-A-P. Molson. Ooh. Molson. No. See? Right here. September, October, January, April, June. These are months. Months of the year. Those are not weeklies. Okay? A week, 52 times a year. Monthly, 12 times a year. Now, if I'm making 1 or 2% with every trade that I do, A monthly will give me 12 to 24% for the year. A weekly will give me 50% to 100%. It's a numbers game. No matter how you look at it, I want weekly because weekly will give me 50 to 100% at the end of the year. Mark Martin. I wonder if that's the same Mark Martin I went to school with. That would be cool. Starling, thank you for that. Simone is in the house. Starling, thank you for that. Connor McPeak. Do you ever follow Nancy Pelosi's choices? No. Starlingo, how do you like tap? We already talked about that one. Yep, your residence is from, Don Chepe. Thank you there, Don. Chris. Thank you, Chris. PJS? What is PJS? Oh, Don, thank you. What is PJS? PJS. Absolutely nothing. New breed. What are we learning here? We're learning to invest in dividend stocks for weekly cash flow. All right. Dragon opinion. Jamison, good evening. Salty, good evening. Grace, which stock are we looking at right now? Thank you, Don. We were looking at Target a little while ago. Conspiracy Ninja Siri. I have done that. I bought a call thinking it was a put. Don't feel bad, Edgar. Don't feel bad at all. Most beginners lose money by hitting the wrong button. So I always tell people, never ever hit that submit button the second time until you've read it, understood it, and agree with it. The voice of wisdom, your residence, also known as Hakuna Matata, is from Sweden. Mama! Hello, good evening. Mama, don't let your babies grow up to be cowboys. Let them be doctors and lawyers and such. Crypto Mike, thank you for that. Aussie are awesome, thank you. Jameson, still struggling with that, not quite sure. Butter is healthier than margarine. Oh, margarine is not real. Of course butter is healthier. Yeah. So wait. So Ben Z. Yeah, see, Ben Z, growing up, they told us butter wasn't good for us and margarine was better. Well, it wasn't until recently we found out that margarine is not real. It's processed and it's a bunch of oil, and it's not good for us. Butter is natural, and yeah, it's good for us. Better. JC, good evening, young man. Well, thank you, JC. Okay, Mike in love. We already looked at the gap. Had Kohl's become a meme stock? I don't know. Arvesio. Joanna, you like that explanation? Glad you like that one, Joanna. Brian says Kohl's has the earnings this week. So, Brian, thank you for that information. Number one, I think somebody mentioned that last week. But here's the thing about earnings. I don't pay attention to earnings for the most part. On the ones that are traditionally subjected to black swans, like Target, those I'll pay attention to. For the most part, I don't pay attention to earnings. Now, here's the reason why I don't pay attention to earnings. I have, in my lifetime, seen many, many earnings that are positive. Great, we're wonderful, we made a lot of money. And then the stock goes down. Flip side, I've seen negative earnings. We missed our target, we didn't do this, everything looks crappy, and then the stock price goes up. So, no, I don't pay attention to earnings at all. Edward, SoFi, is it a go for long term? Alpha 2A. Let's take a look at SoFi. 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 I'm going to say no at this moment in time because I don't like buying at the high of the year. Okay? Now, you may like it. Perfectly fine. It may continue going up. But it was at 8. Now it's at 25. 8 to 25, that's over 200% increase. Do you honestly think at a 200% increase, no one's going to panic and sell and take their profits? I don't buy at the high. I just don't. I don't play that game. La, 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 la. Ooh, Scotty wants to take a look at Pepsi. Pepsi, in case you didn't know, has been around for over 100 years, is the dividend king. Here's your bottom here, shoots up. Now she's pulling back, 149.64. The 150 is going for 132. Not quite 1% for Pepsi. Sorry, Scott. For me, it's strictly a numbers game. Don't get me wrong, I love Pepsi. But as you can see, hit a high here. Now it's pulling back a little bit. Tango Dash, good evening. Brian Luby, good evening, Brian. Mindset Growth, good evening. Stephen Wielder 4, good evening, Stephen. Thank you for the roses, very lovely of you. What is the list? Is it posted anywhere? User 3309241, whatever. I'm going to call you Oscar. All right, is the list? Are you ready, Oscar? Okay. Dividend Kings. Go to Google. Dividend Kings List 2025. Hit that enter button. Within 2 or 3 seconds, that list will be right in front of you. Same thing with the Dividend Champions, same thing with the Dividend Contenders, same thing with the Dividend Aristocrats, same thing with Warren Buffett's list. Any list you want to take a look at, go to Google and say, hey, what's this list? Bo wants to take a look at, hey, Remy, how you doing? Bo wants to take a look at Marvell, MRVL. Oh, interesting. Did you see that? High, low is, look at this. Shoots up, pulls back. Now she's turning around right there, 73. The 73 is 3. Oh, I got to get up for this one. Wow. I like that number. Let's check it out. You ready? Here we go. High, low, where was it? Where is it? Look at this. Up, down, up. 73, okay? The 73 is going for 380. That's over 4%. Let's check it out. All right. A year ago, 70 bucks. High of the year, 128. That was the end of January. Bottom, oh, imagine that. The bottom's in April. Second week in April. Okay, from 50 bucks to 85, the $35 increase. That's more than a 50%. Okay, 50 bucks to 85 is a $35 increase. Well, 50% of 50 bucks is 25. This is a 35. Yeah, what is that? 60% maybe? Nice. Pulls back. Now she's going up. Look at this. Here's the bottom here. 1 day, 2 day. Tomorrow is going to be day number 3. Is it going to be higher? Is it going to be lower? Is it going to be an opportunity to jump in? I don't know. We'll soon find out. Well, let's go. 30 days ago today. What do you think? That's the 30-day chart. High, low, where was it? Where is it? Look at this. Up, down, up, down, up. Definitely an upturn. There's the bottom. 1 day up, 2 days up. The next one is going to be day number 3. The 73 right there, 380. Let's do one, see what it looks like. I'm kind of curious. Really, I am kind of curious. All right, let's get rid of this. Let's go covered call. Let's do the 73. One contract right there at the market. Here's Johnny. Buy one covered call. Marvell 129 August. That's this Friday. The $73 call at the Marvell at the market to open. Here's the profit, 273, 7,000 bucks. That's an expensive. What do you call it? Ooh, let's call it a pinball machine. Pinball machine, 7,000 bucks. And the kids keep throwing in quarters, $273 a week. Nice. Think of it this way. You can think of it any way you want, but if you change the way you think of things, maybe it will click that sounds like a good idea. So if you think of this as a cash producing asset, an investment. So I'm investing $7,000. Vending machine, gumball machine, pinball machine, something that people feed on a weekly basis. Washing machine, car wash. So this one is costing me $7,000 and it's bringing me $273 this week. What is it going to bring me next week? Well, what about the week after? It has an option every single week. So the questions are always the same. Does it make sense? Do I like this company? Am I willing to buy it and hold on to it and never sell it? And continue to get weekly cash flow every single week. It's a weekly cash producing asset. Not a stock. You can think of it as a stock if you want, because that's what it is, but it's also a weekly cash producing asset. $7,000 is going to give you one contract. $14,000 will give me two contracts. $70,000 will give me 10 contracts. We're all different. Okay, you may have $5,000 to play with. I may have $50,000. Tom, he may have $362,733.10. How many can he buy? We are all different. Stop measuring yourself or comparing yourself to someone else. You are on your own journey. You are different from the person next to you. Okay? Just whatever works for you. Yeah, Eric said earnings Thursday. That's a no. Eric doesn't like having earnings. Eric, I don't care about earnings. I really don't. Either the numbers make sense or they don't, one or the other. And plus, we're coming into the end of the third quarter, which means the fourth quarter is coming up, and the fourth quarter is usually always better than the first, second, and third. Fourth quarter is usually always best. Anyway, besides the point. So let's get the calculator out and find out what is 273 on this $7,000 investment. Okay, 273 divided by 7,027. Grand total of 3.8. I'm writing that one down. Nice. Love it. 3.8% for 1 week. Again, questions are always the same. Does it make sense? Do I like this company? Am I willing to buy it and hold it? Those are simple questions. Next, where are we now? We got 10 minutes left. Let's do some questions. Questions and answers. If Powell lowers rates, will stock prices go up? Frank, I honestly couldn't answer that question. Now, I really don't pay attention to that. Frank, the only reason I don't pay attention to it is because I'm retired. I have no choice in the matter. So regardless of what Powell does, I'm still going to be retired, and I'm still going to have a rate of return. Do you stand alone? I have no idea what that means. All my shares look like they are being called away. Nothing wrong with that at all, Dylan. Okay, you buy something, you sell something. Dylan, you got to ask the question, what did I buy it for? What did I sell? What's it at now? Did I make money? Am I at risk of losing money? What do I do next? IXHL. Edward. IXHL. What the hell is that? It sounds like an ETF is what it sounds like. Okay, I'll do it one more time. IXHL. Hell no. What the hell's the matter with you? No. Dylan, do you buy now or wait until Monday? Dylan, and everything is high, so is there a good buy for Monday? Well, Dylan, there's always a good buy Monday. Okay, I just pointed out 4 of them, not that they're tips. Remember, Dylan, something goes up, something's going down. Something goes down, something's going up. There's never a, what do you call that? It's never one-sided. Okay. LB, what's happening, LB? Jugna, what's the ticker? AT&T. Time to delete. Hey, James, good stuff. Where can I find these recordings? YouTube. Okay, Bishop. We already looked at Archer. Archer's already a no. We looked at that one earlier today. Brian Luby, that's terrible. Brian, I'm not quite sure what you think is terrible, but okay. Brian, you wouldn't. I have no idea. Okay, Jugna, NVIDIA, hell no. Now, Jugna, the reason I say hell no to NVIDIA, what is it, $130 stock, and it pays a 1 penny dividend? Now, Scott Ware looked at Pepsi. Do I only do covered calls? Nope. I do a whole bunch of stuff. But I only give it away for free is the covered call. OBBC. Todd, what the hell is OBBC? OBBC. No, OBDC. Okay, hold on. OBDC. Hell no. What's YouTube? Diane, the funny thing is, you are on YouTube asking me what's YouTube. Merchants are what you call the first stock traders. Okay, not quite sure what you mean, but alrighty. It is all recommendations. No, it's not. Financials will tell you the tale. Todd, you're absolutely 100% correct. I bought so far the past week, but I don't know about this week. Some say it will hit 40, but I have no idea. Watch Catfish Taylor. Okay. Dylan, so did he say Siri looks good for the week? I didn't say anything. Jules, 43 years old here, living paycheck to paycheck. Is it too late for me to learn stocks? Absolutely not. So, Jules, here's a question for you. Let's say, hypothetically speaking, Jules, you're 43, and you decide that you want to retire at 65. You got 22 years. 22 years. So let's say it's only, hold on. Hold on, you're gonna like this one. Let's do this. We haven't done this in a while. All right, Jules, you ready for this? Oh, weekly compound interest calculator. I'm gonna do this for you, Jules. You ready? You ready? Here we go. All right. All right, Jules, you're saying you live in paycheck to paycheck. You're 43 years old. You say you want to retire at 65. That's 22 years. Okay? 22 years. Let's say, hypothetically speaking, Jules, you start out with 500 bucks. Can you do 500 bucks? 500. Okay. Now, let's say, now, let me finish explaining what this is. This is a weekly compound interest calculator, unlike anything you have seen before. Now, I've seen plenty of compound interest calculators. They compound on a yearly basis. Nobody compounds on a monthly, on a weekly basis. And those compound interest calculators don't allow you to put in money every week. So, Jules, just for the fun of it, let's say you start out with 500 bucks. Right here, see, 500 bucks. Okay, the very next line down will be periodic deposit. So let's say, hypothetically speaking, Jules, you put in, you think you could do 10 bucks a week? Just 10 bucks a week. Okay, 10 bucks a week. Now, I'm showing you how to get 1% per week. So always going to do that 1%. Okay, deposit frequency every week, 10 bucks. Okay, you start out with 500 bucks, 10 bucks a week. Okay, paycheck to paycheck. Can you squeeze in 10 bucks? Hold on. Now, you got 22 years until you retire. Okay? 22. Now, let's say, hypothetically speaking, Jules, whatever number this is right here, we're gonna multiply it by 0.01 because 1% a week. So if you have $100,000, 1% a week is $1,000 a week. So let's see. Okay, 500 bucks, $10 a week, 1% a week. Consistency is key. You have to do it. It's kind of like brushing your teeth. You brush your teeth every day. So why can't you commit to take a look at your money every day? 5 or 10 minutes, that's all it is. That's why it's called the 10-minute trader. Because my 9-year-old daughter is like, how do you keep a 9-year-old interested? Simple, safe, predictable, very short amount of time. So here we go. You ready? Ready, Jules? Here we go. Compute savings. Holy shit. You see that number? I'm not going to tell you that number. That number's crazy. 500 bucks, $10 a week at 1% a week. What is that? 13 million. Do you realize 13 million, 1% a week is $13,000 a week? So let's say you can't do 500. Let's say you start out with $100. $100. Whoops. And let's say you only put in $5 a week. Okay, you still got 22 years until you're 65, right? Okay, so starting out with $100, $5 a week at 1% every week, it's still $5 million. Consistency. That's it. You start out, and every single week you take a look at your money, and every single week you make a trade in a manner and what makes sense to you. Okay, and if you're starting out with a small amount of money like that, you're going to need something like Acorn, Webull, or Robinhood, something that has fractional shares. And you might have to do dividend capturing for a little bit. But the numbers are what they are. It's the consistency. Joel, Joel, do me a favor. Go take a look at the numbers for MSTY. Seriously, go take a look at the numbers and see how consistent they have increased their dividends. Are they consistently profitable? Then take a look at how old they are. They're not even 3 years old yet. So no. So Breaks IRT. Palantir, PLTR. Do you take a look at the dividends and how consistently profitable they are? Brian, why is the screen backwards? Because you're on YouTube. For this strategy, you would need 100x the stock price. Not 100% correct, Dylan, but close. Todd Smith, I heard Kodak was a buy right now. Okay. I think he's using the back of his iPhone and he doesn't know how to switch it. Dylan, you're absolutely right. I am using the back of my phone. That way I can read all the questions you guys have. IRT, he only does dividend stocks. Thank you, 86. Holy cow. Rest of these questions. Truth, Hewlett Packard, tomorrow. Motley Fool suggests Starbucks. Well, yeah, of course they do. I have Starbucks, and I have Hertz. United Healthcare, UNH. Okay, we let United Healthcare go only because she rebounded, and now she's just out of reach at the moment. Apple did the same thing. Would you consider UPS since the stock got crushed and the yield is so high? Okay, AI coach Jeff, we'll have to take a look at it tomorrow. I got 1 minute till 11. I'm done here at 11. What did I miss? Mara. I have some Riot. Ale. Crichton Barrett. Check with me tomorrow. We'll look at that tomorrow. Dropping Kool-Aid. What was that? Oh, I can't see that one. Bought 3,500 shares of Newsmax last week. Okay, cool. Are you teaching a class right now? Adrius, how are you today? Yes, I was teaching. What do we have over here? I can't see the whole board. Why can't you see the whole board? Oh, there we go. Okay. Use it, pull your pants up, bro. What is your win rate? Andy, great question. As far as I know, I think I've had like 12 or 1,300 shares, 12 or 1,300 trades this year so far. I think I lost 4 times. Just joined. What stock is this? None. Why would you need money if the stock goes down? Margin call. Hey, teacher, is XRP is future? What prediction for 2030? I live 1 week at a time, brother. I'm not looking at 5 years from now. Dylan, makes no sense. I don't do crypto, thank you. Great tips. 1% a day is great. Only sitting at 52% average per day myself. Salty stock skipper. Good for you. I use Yahoo Finance as well. Great free resource. Good. Donnie B or Dan B. How much per month? Well, if it's 1% a week, each month usually has an average of 4. That'd be 4. For your assistance, how much per month? Oh, that would depend on what level you want to be at. How much assistance do you want? And Dan, it's always going to come back to of what do you think it's worth? Good question. P&G, Procter & Gamble, Stinky Pinky, how are you today? Do Joby as a comparison for Archer. We'll have to do that tomorrow. Once they turn profitable, stock pops. Sometimes, yes. Okay, Cool Arrow, Marrow. We'll have to take a look at it tomorrow. Explain the teacup. Okay, Harv first. The teacup. I drink, wait a second. Ginger, honey, tea. It's good for my throat because I'm not used to talking so much and my voice box gets all sore. That's what the tea's for. Oh, the honey really makes it feel better. Mr. Clean, can you move the camera, push it backwards from the right? Oh, wrong way. Oh, right there. Ooh. There we go. Okay, Manolo. Tesla, we'll have to look at it tomorrow. M. Hodds, target 5 words. We had a new CEO. Yeah, they had a new CEO. They also didn't hit their target. We missed our target. Alibaba, Sally, we'll take a look at that tomorrow. Tony Montana, good evening. Angie, how are you doing? Nico, has any company broke their dividend king streak? Yep, plenty of times. You break your streak, you get kicked off. As a matter of fact, Chubb, C-U-B, I think it was C-U-B or C-H-B? No, or C-H. Okay, anyway, Chubb Corporation actually was a dividend king for a while, and then they missed their dividend and they got tossed. Elmadur, thank you. Anyone hit the like button? Okay, thank you. Free classes. Nice. Hearts of Spades. Good evening to you. You crack. Okay. Pull. Oh, bad. He got hood style. Laugh my ass off. Blah, blah, blah. No, we don't. Blah, blah, blah. I think we're all taking a deep dive. Blah, blah, blah. Paul. My man spitting so much delicious sauce. Y'all better be taking notes. First time listening, and I'm fucking loving this. Raul Garcia. Muchas gracias, senor. Anyway, we're past 11. I'm just going to keep on going. Ooh, Dan Lovedell. Haven't looked at it. We'll take a look at it tomorrow, though. How did you do that filter for dividends? You mean go to Google and you Google dividend kings, dividend aristocrats, dividend champions, dividend contenders. Those 4 lists will give you over 300 companies. And for the fun of it, why not throw in Warren Buffett's list? Intel, Ellie, I love Intel. Remy, where can I find that calendar? Okay, Remy, the calendar I showed earlier, that calendar right there is part of Thinkorswim, which is owned by Charles Schwab. It's got nothing to do with me whatsoever. Mouse Killer Dave. Yeah, we looked at SPY earlier, Dave. Sorry. I am thinking to place some long calls. Nothing wrong with that at all, Dave, if that's what you like. I don't buy calls, Dave. I don't. Because there's an issue with that. SPY Austin, good evening. Danny Devine, he wants weekly what? Weekly cash flow, my dear. Weekly cash flow is what I want. Oh, what did I miss? Questions always move. Okay, Don, good evening, Don. Thank you, Don. That's very nice of you. Manolo, which is better, Microsoft or Apple? Ooh, that's a tough one. It's always going to be a numbers game. Always, always, always. Mr. Nunn Fungible, how are you doing today, Mr. Nunn? Check Alt 5. Okay, Mr. Nunn Fungible, you have to tell me what Alt 5 means. Okay, Alberto, what should I be looking for when investing in companies? What is a gross expense ratio? Oh, okay, Alberto, you're asking questions that I would prefer not to get into because the more information you ask, the deeper dive you're going to go into for all the other different criteria that you could be looking for. The only thing I'm looking for, Alberto, is the stock in an upward trend or downward trend. Okay? If it's in an upward trend, what? Not that one. That's not what I want. Okay? If it's in an upward trend, am I buying it and what am I collecting? What am I buying it for? What am I selling against it? What am I collecting? What direction is it going? Okay, all these things have something to do with it. Now, Alberto, I said I created it for my 9-year-old daughter. You want to get more complicated? Yeah, you'll probably get better answers. You probably get better fill rates. It's probably going to take you more time, more energy. It's always going to depend on how much time and effort do you want to put into it. More time, more effort equals more money. Me, I'm perfectly okay with 1% a week. It takes me 5 or 10 minutes a day. I'm good. Do I own any ULTY? Frank, do yourself a favor, Frank. Joe Butler. Ooh, thank you, Joe. Frank, ULTY. Whatever financial website you use, go take a look at how many years consistently has ULTY been profitable. How often have they increased their dividends to their shareholders? Okay. Mr. Fungible, ALTY, Alt 5. I have no idea what that means. OXLC. Thoughts on this one? Brad, we'll have to take a look at it tomorrow. Joe, tomorrow. Danny Devine, A6, thank you. So he trades them and holds them, some of them long. No. Okay, Danny, my idea of long term is 30 days. That's it. Leah Lorian, Dividend Kings 2025. Absolutely. Mr. Farrow. Thank you, Mr. Farrow. What is this stock? That is AT&T. Cool, Sophie. Over 4% of what? All right, Jade, 4%. Well, 4% of 10 is 40 cents. 4% of 100 is $4. 4% of 1,000,000 is 40,000. Okay, 4% of whatever it is you're looking at. Brad Wood, 26.89 OXLC monthly. Okay, good luck with that one. Not something I'd do. Cool Arrow, Dollar General, we'll take a look at it tomorrow. Dividend Kings, Aristocrats, Champions. Yep. Randy, good evening, Randy. Let's get Flex. Okay. Paulo Cruz, good evening. Leah, is this still Pepsi? What are we looking at? Oh, we done with that one. This is Marvel. That was Marvel. Thank you. You're welcome. Sam Wise, what site is this? You are looking at the options and charts. Sam Wise, it's not a website. It is a trading platform owned by Charles Schwab. Okay, John Fia, that right there is AT&T. 3.8 return, Mosh, thank you. Lincoln, be advised, he is synthetically selling puts. Why the hell would you say that? I don't sell puts. Where were we? Okay, right here. Lincoln Log, be advised, he is synthetically selling puts. Use chat to explain. Synthetically selling puts. Well, I hate to be the bearer of bad news, Mr. Lincoln Log. However, Mr. Lincoln Log, all my trades are listed right here. And you will notice, and you can see, there are no puts there at all. They're all covered calls. Love writing options on Tesla. Way to go. Hollywood. What asset is that? Yes, most likely United Healthcare. We looked at that one. Love Marvel. Love Marvel. It was Marvel. What are your top 5 stocks to write options on? Mikey G. What was 3.8? That was Marvel, Mikey G. Bank of America. Take a look at it tomorrow. Mosh. Puts. So we got Target, Marvel. What other two? Okay, they're not tips. They're not tips at all. And by the way, Rob, this is being recorded. You can actually go back and watch it again. Delia, JP Morgan, Facebook. So, okay, Manolo, unfortunately, Facebook has only just started paying dividends. So only got 2 years of dividends. No. Marsh, cash secured puts, covered calls is the method. Thank you. Okay, DX. Robert John, DX, what is that? We'll take a look at tomorrow. Jack, Jo, Neo, and ZM. She actually on TikTok watching you. She's actually on TikTok watching you. I have no idea who that is, Dahlia. John Fia, check MSOS for me. Take a look at tomorrow. I want to learn this, but too much math requires. Terribly sorry, dude. 1% a week on 10 per week. Genius. All right, Starlingo. Look at Facebook stocks today. What vehicle would you put that money in starting with $500? Definitely look at dividend capturing. It's cheap, it's easy to get into, and you can do fractional shares. Ugh. Can I do this on Bamboo? Okay, John, I have no idea what Bamboo is. With only 10 per week, MSTY is magical. Okay, but Starlingo, take a look at MSTY and tell me how many years have they consistently increased their dividends. Esco, I am looking for stocks or ETFs that will give me 1% for 22 years every week with $10. Okay, good luck with that. PLTR does not pay a dividend. You're absolutely right. How to learn and how to teach children, my kids. Abel Castillo, how are you today? Keep asking questions. That's what I say. Keep asking questions. DX, no idea. Take a look at it tomorrow. What stocks for that return? Oh, 10. Eric, see you in the morning, buddy. Mark, see you in the morning also. What are the best dividend stocks with 3,000? Say, Grant, I have no idea who you are. No idea about your risk factors. No idea about anything. I don't give advice. I don't give tips. Anthony, ooh, I love Intel. I do. Pfizer, nice. What stock for that return? Riley took a dump. Of course it did. DX, now we can see it. Leah, good evening. FizzFi guy. What stock was supposed to return that 13 mil and over how long? What stock? Yeah, I got that one. DX, 1% a week. How are you doing that? Libra Trader. Good evening, Libra Trader. How are you today? You just got here. You best bet come back tomorrow, ask the same question, and pay attention. Or you could go to YouTube and watch the replays. Okay, it's 11:15, August 24th. So this is being recorded, so you can take a look at it later. Okay, Anthony, I love Intel. We'll have to take a look at it another day. Intel, no dividend, so it won't fit this strategy. Covered call on dividend stocks. Yep, DX. What is your strategy? 1% per week. Okay, Libra Trader. Okay, 1% a week. I invest in pre-qualified dividend stocks. Those are companies that have consistently increased their dividends for over 2 decades. Okay, I do a covered call just before the EX date. That way I know the stock is getting ready to move up. At the money calls, 1% a week is what I'm looking for. Thoughts on MPLX? No idea. Coffee trades. Good evening. 86. Thanks. Makes sense. Think or Swim. Charles Schwab. Right, Leah. When is he on again? Every night, 9 p.m. When should we sell dividend stocks? Like, for example, Enbridge. I don't do Enbridge because it doesn't fit. It's Ben said, hello, hello. Huge thank you. Been averaging 1% a week just in premium since April. Awesome, Ben. Way to go. Hems, thoughts. Let's do that tomorrow. Club Med Tom, how you doing, brother? Hey, James, what were the 4 stocks we looked at today and looked good? All right, Club Med Tom, you know I don't give advice. What are your favorite dividends weekly? Foles, he prefers to keep it simple. Absolutely. Ooh, that's it. Okay, WTF, it's JoJo. Okay, JoJo, we'll take a look at QCOM tomorrow. And what do we have over this side? Ready? Thoughts on MST? We'll take a look at tomorrow. Oops, they turn profitable stocks. Yep. Do you use IOF? You're going to have to explain to me what IOF is. MSTU options. Never heard of them. Thoughts on Intel? INTL. What is INTL? Now, INTC is Intel, but INTL, what is that? Anybody know what INTL is? This guy and his 3rd grade degree. That's funny. Gap is history. What's your NVDA options looking like this week? I don't do NVIDIA. They pay a 1 penny dividend, which is a 0.03% for the year. 0.03. Doe, this is for options? Absolutely. Thank you for the wise words. What do you know? Absolutely. I will continue to only take profits and not panic sell. Hey, rule number 1, never buy something you don't want to hold on to for the rest of your life. Number 2, never sell off. Can we look at Cisco? TikTok Tommy, we can look at it tomorrow. Chipotle, no dividends. Ooh, Starbucks. Kika, love Starbucks. Look at it tomorrow. Regional finances. Shoot, you got to give me the ticker symbol. QQQ, do me a favor. Doe. Go take a look at QQQ. Take a look at the last 20 years of the dividends that they paid. We can't see that number. Well, John, that's because these numbers are tiny. If you pull up your big screen TV, it's live on YouTube. Hey, NBIS. I'll take a look at it tomorrow. MNQ Mini. Okay, Christopher Lloyd. We'll take a look at that one tomorrow also. I thought he was trading off of here. Oh, reading off of here. No. Doe, I got 6 different pages in front of me. So I try to go back and forth all the different pages. Andy, good night. Thanks for teaching. How do I access to the Discord and other materials? Just join the Patreon. Andy, tomorrow morning, or actually tonight, Andy, you're going to get a link from me for the Zoom call tomorrow, along with the stocks we're looking at for next week. So tomorrow, when you sign in at 9 a.m., make sure you point out, say, hey, can somebody give me the link for the Discord? And we'll get it for you tomorrow. Jojo, Mara, Intel and Mara. Jojo, we'll take a look at it tomorrow. Basim, you do this for a living? No, I'm retired, dude. I do this for fun. Okay, shoot, regional finances. You got to give me the ticker symbol. Where can I replay? It's not on YouTube. Well, actually, it is on YouTube. Okay, The 10MinuteTrader. Okay, The10MinuteTrader.com on YouTube. How can I get into the Zoom call? Okay, John Fia, send me your number. I'll give you a buzz tomorrow. We'll chat, see if it's even right for you. It's not right for everyone. It's boring, it's slow, it's repetitive. It's the same thing over and over and again. That's it. That's all the questions. I'm done. Now, I didn't do all of YouTube because there's too many trolls on YouTube. ETF buying a managed fund like S&P. Oh, hell no. If you win a war with North Vietnam. What the hell does that mean? More like 2 million. Okay, Dylan. Will you win the Q war with the Taliban in it? What the hell? See, I'm not even going to bother with YouTube anymore. I definitely got to get a moderator on YouTube. Too many stupid ass questions. Too many trolls. Okay, Basim, do I do this for a living? No, this is a hobby for me. Okay? Now, for the past 30 years, I have been investing my own money. And just recently, past 2 years, people have been asking me over and over and over again. So I said, why not? Stand in front of the camera, answer some questions. There you go. All right. 2025 weekly trades needs updated. Yeah, it does. Where did we leave off? Okay, I left off July 25th. Holy cow. Did I really? July 25th. Yeah. July, August, September. Ooh, I get the whole month of August to do. Thank you. David, thank you for that. Good to see you again, James. Barry, thank you, thank you, thank you. So I answered all the questions as best I could. You guys have a great day. All right, that being said, see you guys all tomorrow. Done over here. Whoops, oops, no. Come on. And here, and there, and here. Alrighty. There we go. Thank you, Leah. Thank you. We need that T-shirt. Would you believe it or not? I actually have a Shopify store. The T-shirts are on Shopify store, but I don't know how to link it to my website. Your fan club has completed the first stage of the club quest. Yay! Awesome. All right. Done. All right, you guys have a great night. We'll see you all tomorrow. And done, and here, done. Uh-oh. Done there. Come on.